Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these my charts, my daily charts. This was all my own original work, as I think you deserve to have that. So with that, euro dollar. A counter to the counter bullish harami on Friday, if only just, as well as a possible inverted hammer pattern, usually seen as bullish, though there is some strong discussion in the technical analysis community about that last bit. It was a reaction move back up from the dark blue lower time below, currently at 115.76, of the influential and recent showrunner, the late March to mid-May bullish shift pitchfork. This pattern has been running the show since its inception, especially the lower time and the overhead middle time. That's currently at 119.12. We also have below the November 2020 low at 116.02 and a 2019 high at 115.70. Meanwhile, overhead, we have the October 2021 high at 116.92, and then a fairly free area until the downtrends start, which is currently in the 118.15 area. Finally, as I've now said repeatedly, we are set up with 6 months and a bit of this year gone by for a possible annual key reversal pattern here. Thus, if we close on Wednesday the 31st of December 2025, either over 110.36 or under 103.53, then we'd be on. Anything in between there would have a lesser outside year pattern. I'm at this stage not even going to contemplate what the result at the end of the year will be, just that we are set up to achieve one, though right now it looks very much like an annual key reversal up. So far today, a lower open, but a move back up, though still within Friday's range. Cable, aka sterling against the US dollar. A gravestone doji on Friday, usually seen as a bearish pattern, though there is the caveat that the pattern is not right at the top of the recent action. The top side was capped by the combination of September 2020 high at 134.83 and the green short medium moving average, currently at 134.91. And prices dropped back down through the 2024 high at 134.36. We seem right now to have been caught in between the green short medium moving average overhead and the mauve medium moving average below, which is currently at 133.01. Both rising, though not at the same rate as each other. We also have the March 22 high below, which is at 132.98. Just as an aside, I've previously referred to the overhead congestion between 134.83 to 136.43 as treacle, basically, in its consistency. And I thought it worthwhile noting this. Looking below, well, we still seem to have a seeming free zone until the congestion between the March 22 high at 132.98 and the 61.8% Fibonacci line of the June 16 to September 22 move at 132.46, plus the shallow rising neckline extension to the recent April to May small head and shoulders continuation, apparently currently 132.53. Okay, so much like Eurodollar, we are set up here for this market to make that rarest of patterns, a possible annual key reversal. Thus, if we close on Wednesday, the 31st of December 2025, either over 127.29 or under 125.11, then we'll be on. Anything in between, then we would have a lesser outside year pattern. I'm at this stage not even going to contemplate what the result at the end of the year will be, just that we are set up now to achieve one, though it does look like we are moving towards an annual key reversal up. Additionally, we are set up now with a week and a half to go to have a possible monthly key reversal pattern here. Thus, if on Thursday the 31st of July we either have a close over 137.33 or under 134.59, then we'll be on. Anything in between would have a lesser outside month pattern. Now, right now we are flirting with being either an outside month or a monthly key reversal down. Now, so far today, a suitable lower open, but then a move higher just over the 2024 high and looking like a bullish engulfing pattern right now. US dollar against the Japanese yen. A hanging man pattern and second bullish white soldier on Friday, though prices once again stalled ahead of the flatlining gold long moving average overhead, which is currently at 149.69. There are two major patterns in operation here. We have the bright red mid-January to mid-June broken descending expanding wedge pattern, which saw a break higher mid-June, though it has been more of a stroll higher. And the primary target X for this is up at 150.5, so not too far away, whilst the secondary, much harder to reach target X1, is up at 158.85. Additionally, we have the larger, shallower and longer term dark blue early July 24 to mid-January 25 bearish shift pitchfork. This pattern is still very much alive, with prices over the last 2 weeks moving up from the combination of the middle time below, which is currently at 145.19, and the very slowly declining medium moving average, currently 145.71. So far today, a lower open and a try to recovering, as well as a try lower, but right now we are hovering just below where we opened today and looking a bit like an indecisive spinning top. US dollar against the CNH, the offshore Chinese yuan. An indecisive spinning top pattern on Friday, but one that could also be seen as a bearish harami. This after the previous session's small bullish engulfing pattern. Prices once again capped by the flatlining green short medium moving average, currently at 718.67, as they seem to have been for most of last week, whilst at the same time trailing along the top or near the bright red lower trendline extension, currently 716.23, of the January to mid-April descending triangle pattern. Further up we have congestion formed from the May 2020 high at 719.64 and a 50% Fibonacci line, the September 22 to April 25 move at 719.91, plus the dark blue neckline extension, currently 721.06, of the late August to early November 2024 reverse head and shoulders pattern. Meanwhile, below we have Fibonacci congestion between 714.48 to 714.95. A very big level, but there you go. That has been surprisingly good as seen 3 and 4 weeks ago. Finally, a strategic observation, one I'll continue making here. Please note how the long moving average has been, despite some up and down waves, relatively flatlining for quite a while. So that if prices do stray too far away from it, then they seem to be brought back towards it, and that applies in either direction. So far today, a dip lower, but not by much, as we are still within last Friday's range. US dollar against the Brazilian real. A reactionary bullish white soldier on Friday after the previous session's key reversal down and bearish engulfing pattern. Prices reverted back up to close on what has become a combination of an attractor and a resistance, and that is the slowly declining green short medium moving average, currently at 557.77, though the last 2 weeks or so does have elements of a bullish halfway hesitation about it. Further overhead we have the mauve declining medium moving average, currently at 565.96, which ties in with the interesting and significant 38.2% Fibonacci line of the April 22 to December 24 move at 565.07. and the bright red upper time, currently at 565.15, of the mid-December 24 to mid-April 25 bearish Andrews pitchfork, which had been the showrunner here since spring. Looking low, we have the purple May 24 today uptrend, currently at 541.47, which is in a congestion zone below, from the 50% Fibonacci line of the April 22 to December 24 move of 544.57 down to the 540.16 area, containing the dark blue neckline extension to the June to September 2024 head and shoulders continuation pattern, and that's currently at 542.30. US dollar against the Mexican peso. A combined hanging man and bearish dark cloud cover pattern on Friday, as the immediate overhead congestion, which is between 1876.94 and 1885.40, way down on the market. Overall, the market remains just about within the two significant patterns. The first is the age-old and breached many times early May to date dark blue bear channel, which is currently 1852.60 to 1880.20. The second is the more robust, bright red, early May to late June bearish Andrews pitchfork, with the market right now in between the bright red middle time below, currently at 1856.13, and the bright red upper time above, currently 1888.29. Now, separate to this, we have below a small congestion band between 1850.81 and 1851.71, containing the February 2020 lower 1851.71. Overall, this market continues following on lower from the original move down below the overhead very wide congestion band that eventually became a rectangle top pattern, has been centered on the September 22 high at 2057.65. Now, so far today, a slightly lower open, though still within Friday's range, just about.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.